Hello everyone and welcome to another stock market analysis video here on Momentum channel. Today we'll review my top 3 picks for the best undervalued stocks in the stock market right now. But before we get started, I wanted to share a good news with you. As you might have noticed, I'm wearing a ring. Yes, I just got married this week. Our wedding was small and intimate and was attended by our immediate family, but we couldn't have asked for more. I feel so grateful and loved to have met the woman of my dreams. With that out of the way, let's get into this video. The first undervalued stock to review is VMware. This stock with ticker symbol VMW was last traded at $135.85 USD, but it's showing a fair value of $154.13 based on its real or underlying intrinsic worth. This shows an upside of 13.5% growth with a low level of uncertainty, making it a great undervalued stock to consider to buy right now. Based on Finbox fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their fair valuation per share. Looking at VMware's financials, we see a steady growth in revenue and operating income year over year within the past 3 fiscal years. While company's current liabilities exceed its current assets, which may be a red flag, the total assets does exceed their total liabilities. Furthermore, they have a healthy cash flow from their operations. Looking at peer benchmark review, you'd notice that VMware had a 1-year stock return of negative 5.5% compared to an average of 4.3% positive return for the information technology sector. From a stock volatility perspective, this stock has a beta of 0.89, which is comparable to the beta of 0.86 for the sector. Beta is a measure of the risk arising from exposure to general market movements. VMware Incorporated provides software in the areas of hybrid cloud, multi-cloud, modern applications, networking and security, and digital workspaces in the United States and internationally. The company sells its products through distributors, resellers, system vendors, and system integrators. VMware has a strategic alliance with Amazon Web Services to build and deliver an integrated hybrid solution, as well as a strategic alliance with SNC-Lavalin to provide digital collaboration platform for project delivery. The company was incorporated in 1998 and is headquartered in Palo Alto, California. VMware is a subsidiary of Dell Technologies Incorporated. VMware does not pay any dividend at this time. The second undervalued stock to review is Pfizer with ticker symbol PFE. This stock was last traded at $38.06 USD, but is showing a fair value of $42.15 based on its real or underlying intrinsic worth. This shows an upside of 10.7% growth with a low level of uncertainty, making it another great undervalued stock to consider or buy in 2020. Looking at Pfizer's financials, we see a decline in the annual revenue over the past 3 years. Nonetheless, the stock has shown some increase given the company's progress in developing vaccines to address the health pandemic. While company's current liabilities exceed its current assets, which may be a red flag, their total assets does exceed their total liabilities. Furthermore, they have a healthy cash flow from their operations. Looking at peer benchmark review, you notice that Pfizer had a phenomenal 1-year stock return of 14.3% compared to an average of only 2.6% return for the healthcare sector. From a stock volatility perspective, this stock has a beta of 0.73, which shows less volatility for Pfizer and its stock price when compared to the beta of 0.80 for the healthcare sector. Pfizer develops, manufactures, and sells healthcare products worldwide. It offers medicines and vaccines in various therapeutic areas, including internal medicine, such as cardiovascular, metabolic, and pain. It serves wholesalers, retailers, hospitals, clinics, government agencies, pharmacies, and individual provider offices, as well as disease control and prevention centers. The company has collaboration or co-promotion agreements, as well as licensing agreements with a number of other pharmaceutical companies. Pfizer was founded in 1849 and is headquartered in New York. The company's next quarterly earnings report will be on October 27, 2020. Pfizer pays a decent dividend, currently showing an annual dividend yield of 3.99%. It has increased its annual dividend payment consecutively for the past 9 years. The last undervalued stock to review is AT&T with the ticker symbol T, traded in New York Stock Exchange. This stock was last traded at $30.01 USD, but is showing a fair value of $34.34 based on its real or underlying intrinsic worth. This shows an upside of 14.4% growth with a low level of uncertainty, making AT&T another great undervalued stock to consider to buy right now. Looking at AT&T financials, we see some ups and downs and volatility in the annual revenue over the past 3 years. What's more, the latest quarterly revenue in June 2020 shows a decline compared to the comparable quarter in 2019. Nonetheless, AT&T is showing a smaller total debt in its last quarter compared to June 2019 quarter. AT&T's current liabilities exceed its current assets, which may be a red flag, but their total assets well exceed their total liabilities. Furthermore, they have a healthy cash flow from their operations. Looking at peer benchmark review, you'd notice that AT&T had a 1-year stock return of negative 8.7% compared to an average of negative 7.9% return for the communication services sector. From a stock volatility perspective, this stock has a beta of 0.66, which shows less volatility for AT&T and its stock price when compared to the beta of 0.76 for the communication services sector. AT&T provides telecommunication, media, and technology services worldwide. The company operates through 4 segments: communications, Warner Media, Latin America, and Zender. The communication segment provides wireless and wireless telecom, video, and broadband and internet services, video entertainment services using satellite, IP-based, and streaming options, as well as audio programming services. The company was formerly known as SBC Communications Incorporated and changed its name to AT&T Incorporated in November of 2005. AT&T was incorporated in 1983 and is based in Dallas, Texas. The company's next quarterly earnings report would be on October 22nd, 2020. AT&T pays a fairly significant dividend, currently showing a dividend yield of 6.93%. It has increased its annual dividend payment consecutively for the past 15 years. Please note that this video is based on my own extensive research, but I'm not a financial advisor, so make sure to do your own research before buying any stock. Lastly, looking at my stock market portfolio with Wealthsimple Invest and Wealthsimple Trade, we do see a slight decline in the overall portfolio value. These are my stock investing accounts that I contribute to and fund every week. If you're interested in how I intend to grow this portfolio into $1 million portfolio, be sure to subscribe to our Momentum YouTube channel here and follow us on Twitter, Instagram, and Facebook. The links are provided in the video description down below. There you have it, folks, my picks for the top 3 undervalued stocks to buy right now in the stock market. Do you own any of these 3 stocks or have them on your watch list? What stocks are you considering to buy in the stock market this month? Let me know in the comment section down below. Thanks everyone for watching this video. I hope it was beneficial and you learned something of value from it. If you did, or perhaps to help celebrate my wedding, please be sure to give it a thumbs up and share this video with someone who might benefit from it. Here on Momentum channel, we post weekly videos about stock market investing and finances. Hope to see you next time.